Hi, welcome everybody. Good morning, good afternoon, depending on where you're coming from. Welcome to the Property Management Strategist webinar. Today I have Taylor Malkus. Is that how I pronounce your last name?
It is, yep.
Okay, cool. He's a co-founder of Lighthouse, and we're going to be jumping in here in just a couple minutes talking about all the things that they're offering. We're going to chat back and forth about property management stuff. If you are new here, I am Stacey Salyer, aka the Slayer. All my friends call me that, so now you all can call me that since you're here. You're my new friend. I am the property management strategist, over 20-year veteran in property management, doing consulting and digital course creation for future-proofing your PMC. So Taylor, tell us more about you.
Thanks, Stacey. My name is Taylor Malkus, co-founder of Lighthouse. Spent about 5 years working on the sales team over at Buildium. That was actually my start getting into the property management space. And I've worked with a wide range of property managers, from accidental landlords with 2 units under their management to institutional investors with 20,000 doors. So really seen a lot of different instances and how people go to market. Excited to talk all things risk related in property management.
Yes, there's a lot of risk in property management. It doesn't matter if you have 1 or 1,000 doors, there's always risk. So I would like to know more about Lighthouse, because I know you're the co-founder. Tell us kind of how that came about. What do you guys actually do?
Lighthouse was a brainchild of my co-founder, Tomer Simonoff. He approached me when I was at Buildium. We started to talk about challenges within the property management space, particularly focused on single-family property managers. One of the main things that came up on all of my conversations was deposits. Deposits are just a massive pain for property managers. There's a lot of liability involved. You have to know what you're doing in terms of managing them appropriately. Legislative changes over the last couple of years that have made this complicated and frankly put up a lot of barriers for property managers. So we started Lighthouse as a security deposit alternative, looking for additional options for property managers to really accomplished quite a few things. The first one was simply make moving costs affordable for renters. So Stacey, I live in Boston. The last time I tried to rent was 7 or 8 years ago. It was almost $14,000 just to get in the door, which no one has.
Which is wild, because sometimes I've even seen you can actually buy a house for less of a down payment, depending on the threshold.
That's literally what my wife and I did.
Yeah, because then you're like, wait a minute, I could go buy a house. And in Washington State, we have a first-time home buyer 0 down payment program. If you qualify income-wise to rent at that level, sometimes you can go buy. I love that you guys made it easier.
And we did that calculation too. We looked at the down payment and then what our mortgage would be, and it was a no-brainer at that point. It brought us out of the rental market, which is an issue for our customers. We want people to stay within the rental market until they're ready to move over. So we decided there's got to be a better option out there. So we created Lighthouse as a letter of credit service. Idea being the resident can get the adequate amount of coverage that a property manager or owner needs to protect the asset. We go as high as 2 months of rent in coverage. It covers everything that a normal standard security deposit would. But the great thing on the resident side is it saves them quite a bit of money at move-in. For some round numbers, let's say you needed $1,000 of coverage. The average tenant is spending about $150 to $200 on this service. So it makes it really affordable when they're going to move in. Fast forward a couple of years later, we started to take a look at our underwriting process of residents to understand the risk associated with tenants when they're coming in. Can they afford the unit? What's the likelihood that they're going to damage it? Do they have a history that we can find? Expanded what it is that we're doing today. So Lighthouse, in the last maybe 4 or 5 months, is transitioning into what we're referring to as a risk mitigation partner. So what that really refers to is doing basic checks these days. So like income, identity verification, looking at historical cash flow of a resident, trying to get a better understanding of whether or not they're actually going to be able to reliably pay their rent on time. We're also looking at a couple things like consolidated debt collection services. We offer the security deposit alternative. We're trying to take a large look at the risk environment within the property management space and give property managers a more accessible way to manage it.
So kind of like you guys are morphing into a one-stop shop risk company.
Absolutely. When I talk to property managers, it's amazing how large the kind of ecosystem of partners and vendors that they work with, but they all kind of form into the same thing, which is protecting your bottom line, increasing revenue. We're trying to give you a simple to use platform that's user friendly for your tenants as well. Protect your bottom line, increase your NOI, and give you some peace of mind.
Okay. Well, yeah, we'll dive into details because people love stories and how they can relate to your little housekeeping. There is chat. Feel free to pop questions into the chat. You can say hi, tell us where you're coming from. I come from the West Coast, so we have weird regulations, and maybe Taylor can tell us more about how to get past that. Do you want me to put the poll in the chat you and I talked a little bit about before?
Sure. Do you want to kind of introduce it?
So I'm going to pop a poll into the chat. It's asking if you look at the gross or net income when you're qualifying an applicant. Feel free to answer. There's also one other answer in there too, which maybe you don't screen. I don't know, but I would love to know. I'm sure Taylor would love to know. We're looking at gross. We've got 3 people look at gross income. I used to look at gross income. We didn't really look at net. Tell us, I'm curious why you asked that.
Yeah, for those that don't know, I'm fairly active on the LinkedIn network. A conversation that's been happening a lot in this space is what factors should we be looking at? What metrics are important when we're qualifying an applicant? I think it's changed over the last couple of years. Case in point, credit scores. They just don't do what they used to do. Todd Orshad put out an article a while back that actually talked about there's things that can manipulate credit scores, not for the better. There's positive only reporting. It doesn't take into consideration when a tenant may be late or aspects of a tenant's credit, like medical debts in certain regions. You really need to look for better metrics to qualify an applicant. While gross income is easy to understand, it doesn't necessarily take into consideration their financial obligations each month. Think about child support, any kind of large deductions that they might have, alimony, maybe there's wage garnishments that you're not aware of. It really starts to whittle down people's income, especially when you consider how much of an affordability crisis there is in the US.
Right.
So I'm interested in that topic because NARBM has the standard of 3 times rent to income. That's common. It's really easy for everybody to understand. Personally, I think net income is a much more effective indicator of whether or not this resident is going to be able to reliably pay rent on time every month. I'm trying to get some feedback from the industry on what they're looking for. It's telling that everyone here is doing gross income at the moment. I'm wondering if there's a better way for our platform to help navigate that. I think there are reasons to look at both gross and net depending on what you're looking for.
Okay. So then you'd be training your team to dive in deeper to the actual reporting, depending on what kind of even reporting they're getting, because I know there's like this huge gamut of platforms out there that offer that kind of information. What does the mortgage industry look at? Do you know?
That's more like your debt to income ratio. So they're trying to look at what are your obligations every single month.
Okay. Do you think we might move to that?
I think there's kind of a renaissance going on within the property management space. I see it personally within the single family space. That's really my background. Multifamily has had a lot of really interesting technology for decades at this point, but historically it's been so expensive and it's a heavy implementation. There's a lot of training involved. It's just inaccessible to property managers, particularly that like kind of 50 to 500 unit range, which is really our bread and butter. That's where we live.
Okay.
But I think there's a renaissance going on. Like the technology nowadays with artificial intelligence, it's making screening insights way more accessible and user friendly. And that's our goal too. While we want to give you better insights, we also want to make it easier to understand those insights. I had a really interesting conversation yesterday with somebody that was talking about they have all these tools, but there's no financial incentive for their staff to spend time digging into the information. While you might give somebody the ability to verify that a pay stub is legitimate, how realistic is it that your staff is going to take time out of their busy schedule to make sure that this is accurate? You can get that information confirmed quickly. It speeds things up, takes risk off your plate, and it helps you move tenants quicker, which reduces vacancy days.
So basically, their staff isn't necessarily doing their job, I guess.
I'm not go quite that far.
I just went back to chat here. There's some questions in here, KPIs and that kind of thing. Nowadays, I feel like you can just make anything fake. It used to be just fake IDs back in my day.
Yeah.
Now it's like
we
everything.
see it. I won't necessarily say fraudulent, but the misrepresented income is a lot more common than identity theft. To your point, it is incredibly easy to manipulate a document. You can use your spec tool within your browser. Just right click, pull it up, and you can manipulate an item. I'll go into a real pay stub, change the income from 1,000 to 10,000 in 2 seconds, and you have no idea unless you have a technology that can go in and verify the information you're seeing on documents against actual live transaction data within a bank account. There's no way for you to know. So it makes it exceedingly difficult and things sneak through, which open your business up to liability.
So do you have access to like the IRS where you could verify that? I mean, because technically people are reporting real stuff to IRS.
Yeah.
I mean, business owners, of course, that's always a catch-22, right? You want to report the least amount of income for tax purposes, but you can just like a regular W-2, of course, you're going to report. I mean, because your employer's reporting and you're reporting.
Sure. The way to go about it is looking at live transaction data within their financial institution.
Okay.
We use a service called Plaid for one of our data providers. It's really common in the US. There's over 200 million user accounts. So it's highly likely that your applicants have used Plaid in the past. They're very comfortable with it. And it's great because they actually permission you to go in and review that data. It doesn't give you the ability to transact with the funds that's in the account, but it gives you an understanding of how much active cash balance do they have? What is their cash flow looking like over the last, with us, up to 24 months? Has there been a recent nosedive in their income to indicate they lost their job? You can really get a lot better insights from that. And because we have live transaction data, we can actually take a look at what's on the pay stubs that they're providing and verify that the records match what we're seeing in the verified transaction data. It really gives you a much more confident look into what this person's earning and are they accurately representing themselves on the application.
Okay. And so that's something you guys do. So if I still own my PMC, I wouldn't have to put that on my leasing coordinator. My leasing coordinator would get a final report from you. We had a scoring system, and I don't know what anybody else is doing on this particular webinar, but we would get our final report score based on the different metrics we received back. So my staff didn't have to be the detective. So are you guys kind of the detective?
That's our goal, right? We really try to be careful about providing recommendations because ultimately, you know your properties, you know your clients, you know your applicants way better than we ever will. But we want to provide data that you can make an informed decision based upon. So asking for pay stubs and bank statements from residents is a great first step. It does a good job of weeding out people that are not serious about moving forward.
Sure.
But you need to take it a step further these days because it's very easy to manipulate that kind of information. So being able to verify the information or the documents they're providing have not been manipulated in any way, that's a component of what we do at Lighthouse. Also being able to cross-reference that across multiple databases. So not just on the income, but on the identity side as well, right? Verifying that the driver's license or passport or whatever photo ID they have is valid, hasn't expired, that individual is not deceased. We have them do a selfie to make sure they're a live human being, not holding up a poster of a celebrity or something like that. So we review the data that they're providing to look for signs of manipulation and cross-reference that against multiple databases to verify the data is legitimate.
I know we have a question in the chat, but I want to ask a couple questions about that. Do you have humans verifying all that, the selfie versus the ID, or is that AI? How are you guys doing that? Because that seems like kind of a heavy workload.
Yeah, so AI on our side, and then on your side, as the leasing agent, you're reviewing the information we're providing. We never want to make a decision for you, and frankly, we try to avoid making recommendations because we don't want to push you or lean you some way. But we take a lot of the information and just put it into a much more user-friendly format. That way, your staff doesn't have to spend a ton of time reviewing it.
Okay, so if I have my PMC, my team's going to get this nice report. It's going to have Stacey's ID photo and Stacey's selfie, and hopefully, you know, my team would need to match them up, verify, and then verify all the other data that you give us, and then we would get to decide based on our criteria.
Correct. One of the smaller features we do, but I actually really like it in practice, is social media linking. And an applicant provides their information. We take a couple different parameters. This is nothing groundbreaking, but we just make it significantly faster to search them on social channels. So think Google, Facebook, LinkedIn, Instagram, all that good stuff. It's just a click of a button. It makes it a lot faster to do deeper personal research on the individual, which I find just gives you a better sense of, is this person going to be a good community member within my neighborhoods?
Yeah, I kind of wonder how that goes with fair housing, because I always have the fair housing chirping in my background. Have you ever not found anybody on the internet? Curious about that.
So the results we get are not always perfect because we go based upon the search parameters that each of those media networks give us access to. There's nothing unique that we're doing. You're still probably going into Google sometimes and typing in Taylor Malkus, Boston, Massachusetts, and you can find me pretty quickly. It's also telling these days when someone doesn't have any kind of presence online. Everybody has a different screening process. We really try to avoid boxing you into our prescribed process. We want you to do what you've always done. We're just trying to make it easier and faster.
Okay, that's fair. I always tell my kids, you gotta make sure you're not putting crazy stuff on the internet. I don't even know how they keep track of their accounts. I watch my daughter and I'm like, she's like, well, I've got this private and then this is public. I'm like, oh my gosh, everything's public, whatever. You can find me, but I want you to find me on the internet.
It's actually kind of an interesting topic. One of the things that I'm personally interested in doing over the next couple of years for applicants is making the information transferable. One of the big things we hear from applicants is, I'm having to apply to 15 or 20 units before I find something I like. Everyone's charging somewhere between $40 and $60 for an application fee. If I don't qualify, or maybe I got there late or something along those lines, I don't get that money back. And so it's expensive. What we're trying to do, the screening with us, it's $21. The resident pays for it. The property manager has the ability to charge a margin on top of that if they want to generate some revenue. So it's a great revenue generation stream for them. If they don't qualify based upon your prescribed income requirements, they're only out $21. They're not out $60 and then have to do that over and over again.
Well, unless somebody's fee maxing.
True. Absolutely.
You're not in Washington State, because in Washington State, there is a law that you're not allowed to charge more than what you would classify as an admin fee on top.
The whole West Coast is a challenge, if I'm honest.
We are special. Yeah, that's cool. Yeah, so kind of looking forward for like almost a tenant, like being able to create their own tenant portal or applicant portal where they could apply through you and then have this, well, I'm certified through Lighthouse and here's my package. That actually would be really cool, I think, because it could be great for the applicant. I think it'd also be great for the landlord because, we're trying to fill homes as quickly as possible. And it can take a while to do that background investigation. And so if they had something that was credible, because in Washington State, we actually do have a law that says unless you state in your ads that you don't accept portable reports, then an applicant actually may submit one to us.
Yeah.
And we're required to take it.
Yeah. One of the unique kind of positions I think Lighthouse is in is, so we're now helping with kind of the process because we offer the deposit alternative. It's integrated. We have an 83% adoption rate because tenants see the difference in moving costs and it's material for them. So because of that, they're using our deposit alternative. And so we now also have visibility upon move out into like, how do they treat the asset? Did they keep up with their rent payments? Once they left, even if they had a balance, like, are they making efforts to repay it consistently? There's a lot of information that we're holding on to that I think we can eventually make accessible to both property managers and applicants as part of a network to streamline that process. Because frankly, it's expensive and time consuming for both sides.
Right. Oh, yeah. Because that'd be really cool, too. Fast forward, as an applicant, just be like, yeah, I'm like Gold Star certified through Lighthouse. Like I rented and I did not trash the home and I'm an amazing tenant. You could have different levels. I guess maybe somebody wouldn't claim like Bronze Star. But anyway, so yeah, let's go through the questions because it looks like people want to know more details on your security deposit alternative. When I was looking at security deposit alternatives years ago, as comparing several companies, one of the biggest was that Rhino was able to make options available no matter the rent prices. That's an issue for our company because a third of our 1,500 properties were C-class with rents lower than 1,000. That's a good point because we're talking about the entire U.S. There's disparity everywhere. Those renters were the ones that also needed the most help with security deposit, which is also, I know, like even though I managed in a higher income area, we also did manage some lower, rental units like that. And that generally was the truth. Do you have a rent price minimum? And do you think you'll last longer in the SFR space than Rhino did? All right. Well, dive in, give us all the answers.
Yeah, it's an interesting question. When we first started, we were under this assumption that this is only for low income housing or people that can't afford the property and need an option. First things first, people need housing. So finding ways to make it accessible is a moral imperative. Beyond that, we have been surprised about the makeup of people using our service. Yes, we have a large contingent that are low income. They don't have available savings. So they need options. We also have people that make $300,000 a year, an 800 credit score, and they just want to put money into a money market account versus parking it in a low interest trust account for a couple of years. There's a whole bunch of different reasons why people use the deposit alternative.
That's fair.
One thing that is nice too is we give property managers flexibility. If the tenant needs a break at move-in, but in year 2, 3, when they go to renew, maybe what they want to convert back over to a refundable deposit, because now they've had an opportunity to kind of build up some savings, we make that really easy for them. We give both the property manager and the resident a lot of flexibility when it comes to how they're utilizing our service. There's also a question below about what happens if a tenant defaults.
Okay.
So if a tenant defaults, what happens then? Lighthouse provides an in-house collection service. So that is something that we maintain independently. Basically, we cut y'all a check once the claim goes through, and then you all just basically move on to the next thing. Lighthouse holds the tenant accountable. This actually, I think, is kind of a myth with deposit alternatives. People think that it's like a way to get into the unit without having to be financially accountable for it. And so maybe they cause more damage because of that. It's actually the opposite. The fee they pay to us for the service is non-refundable. So they don't get that back when they move out. If they cause damages, let's say $1,000, we would cut y'all a check for $1,000, but we're pursuing the resident for that $1,000. They're still on the hook for the full amount, meaning they could end up spending more with us. So it really, there's kind of the carrot and stick approach, which I like. That's why we charge a non-refundable fee. There is a risk to our business that's going to happen. Doesn't happen all that often, actually, because we offer zero interest repayment plans. We do positive and negative credit reporting to the agencies. There's a lot of incentives we give to residents to make sure they're paying their debts.
Do you have caps on payouts, or is it more true insurance?
Coverage, similar to an insurance policy. Coverage is going to go up to whatever the predetermined amount is. The amount is determined by you. There is a cap at 2 times rent. While we're not a security deposit, this is a different product. It's a financial services product. We still want to maintain a sense of familiarity with it, and we don't want this to be excessive on the tenant side either. So we want to make sure that like we're providing adequate coverage to the property manager, but it's not excessive on the resident side of things. So there's no dollar limit, but it is capped at 2 times the monthly rent amount.
Okay. And so in those markets that have caps on security deposits, example, Washington, or certain cities in Washington that do, would that be the cap? So like, let's say that the security deposit would normally be capped at 2,000. Is that your cap as well, or does it not apply?
I'm not an attorney. I'm not going to give you legal advice. I would follow whatever your state laws are for deposits. Portland, Oregon has some of the most stringent rent laws. I believe it's capped at 1 times rent for the security deposit. If you were to use a service like this, I would encourage you to stay at that level. Technically, we are not a security deposit, so maybe we don't have to follow those rules. That's sometimes a kind of a gray area. Right. Some states have legislation specifically to deposit alternatives. Most do not at this point because it's still somewhat new in the industry. My recommendation is always make our service optional. We want the tenant to still be able to provide a standard deposit. But if they need flexibility, they can use us. You need to operate it similarly to how you would do a standard deposit.
Yeah, I know Washington State a few years ago put a lot on the books, basically allowing security deposit alternative. However, there's also a law on the books that if you have to accept, so we have to accept payment plans for security deposits now. Like if a tenant puts in writing, like I can only pay whatever per month. And then if they default on that, we have no legal recourse to go after them. Unfortunately, sure, we can do 10-day notices or whatever the notice timeframe is now, but we really won't be able to get an eviction on that. Yeah.
I mean, some people do that too. Like there's some companies out there that have scale and they're able to tolerate the risk level of running like an in-house deposit alternative program. It's a nice way to generate revenue. The challenge is that there's a lot of risk. You have to do the math behind it, determine your average tenancy and how you want to charge for that. The struggle is if a tenant doesn't stay for your average tenancy, then you'll potentially have a large liability on your books and you have to pursue the resident for that. You probably are going to accrue bad debt. That's why companies partner with us, because the second the tenant moves in, that coverage is guaranteed for the lease term.
Yeah, when I'm working with clients and strategizing about their revenue streams and everything, it's really also dependent having those conversations of, where do you want to take your business and where do you want to put your time? And yeah, the risk of that as well. I don't know.
Yeah.
I prefer partnering with vendors on this particular type of thing myself. We had another question. Do you have a cap on the number of tenants that default or cause damages as a pool for a company or a geography? I guess that's common with the surety bonds like Rhino and Jetty had?
No, we don't. We price our products based upon the risk of that particular resident. Where I think Lighthouse has a unique position is because we're positioning ourselves as a larger risk mitigation partner, not just focused on deposit alternative. We're looking at a lot of data for these residents, considering different data points. We've built our business as a sustainable model. If we have a huge amount of claims, we still have financial backing to stay solvent. We built our model specifically so that we don't run into that moving forward.
Yeah, that's interesting. So yeah, I'm just trying to think what other questions, if there's other, or anybody else have other questions. Let's see here. Yes, this is being recorded, and typically I edit them and then I send out the replay about a week or so after, or you can find it on my YouTube channel as well. You'll get all that information in your email. Yeah, and thanks for joining us, Jeffrey, even just for a little bit of time. What else should we talk about, or do you have any crazy stories you want to share?
I just got back from the Property Meld event, the MX Summit last week, which was fantastic. Anybody that hasn't gone, highly recommend going next year. Yep. I got in the ring of a rodeo. It was crazy.
I got some B-roll of that, so I'm using that in my marketing. And I've been to rodeos before. I was like, oh my gosh, like they must just be in so much pain. Like, I don't even know how they do that.
I think they said the average age was like 21 for the bull riders. So it's different.
That's fair.
So one of the things I found really interesting when I was talking to property managers and they were coming by the booth and I was chatting at some of the after hours events is how often people are finding out when they go to evict a resident that they're not actually who they said they were. Mm-hmm. They run into identity fraud pretty frequently. It's a real challenge, right? Because then you have to make a decision of like, how do I pursue this in court? Because I don't actually know who's in the unit. And ultimately, if I don't know who that is, one, it's going to be challenging to evict them. And two, it's going to be incredibly challenging to collect on whatever the leftover balance is. This is really where I think Lighthouse kind of has an interesting position in the space because while we're not going to be perfect, right? No company is ever going to be perfect. We're removing a lot of these risk factors before the tenant ever actually gets into the unit. And then if they do get into the unit, you've already partnered with a company that is basically, we're putting our money where our mouth is. We're saying we trust that we know who this tenant is. Mm-hmm. We have validated the level of income that they have and feel comfortable that they'd be able to repay these debts. And if they don't, we're here to support you as a partner. We have kind of a unique position where we can help property managers reduce that debt and make it easier for residents to get in the unit, which, you know, there's a snowball effect, right? Reducing vacancy days, reducing bad debt, generating new revenue becomes this kind of flywheel for property managers. My goal for the business is to start adding in things like we're working on right now. So in a couple of months, we're going to be releasing a consolidated debt collection service. One of the limitations of deposit alternatives is we only cover up to a certain amount, right? Let's say 2 times rent. But you're going to run into scenarios where tenants just trash the place. They cause 15 grand worth of damages and someone's got to pay for it. What we're trying to do is instead of you having to go to Lighthouse for the guarantee portion of the deposit alternative and then a collection service separately, we want you to just submit a single submission to Lighthouse. Okay. So you'd provide the $15,000 debt to Lighthouse. We pay you the guaranteed portion of the deposit alternative, and then we go collect independently on the remaining portion. The nice thing is you only have one basically debtor that's calling the tenant. So it makes it a lot easier for that tenant to figure out like, how do I need to repay this balance?
Right.
On top of that, we're talking about, you know, real-time legislative updates, which is a huge topic within the property management space. There hasn't been a lot of progress made there over the last couple of years. So that's something I'm really excited about. And Stacey, you and I talked about that last week. So I know that's something you're passionate about too.
I nerd out over it. It's probably because where I live. But yeah, it's so important. And I really strongly believe all property management business owners should be dialed in to their legislation, whether it's state and or local, for sure. Keep on.
The National Association of Residential Property Managers, NARPM, is fantastic at that. They provide constant updates. Their chapter meetings, if you have one in your area, I highly recommend joining and going.
Well, I think the West Coast pretty much has state chapters as well. I don't know if Oregon technically has a state chapter, but their Portland chapter is really good. And then Washington has a state chapter. I know California does as well. They have a whole conference.
Unfortunately, in New England, there's nothing close to me, so I have to travel quite a bit. But it's always fun to go to local chapters and meet new folks.
I have a totally random question. Has anybody ever talked about possibly like DNA testing in the future? If you think about it, because we're just becoming such a digital world and we have AI coming onto the thing, do you think there might be a time where we have to submit DNA to actually prove who we are.
So here's my thinking on this. I spent quite a bit of time selling property management software to property managers.
Yeah.
Getting people to move from paper and like spreadsheets to a consolidated platform to a CRM was pulling teeth. I mean, really, really challenging. Getting somebody to do something that sophisticated is a long way off. That being said, property managers are realizing that if they're not embracing and adopting technology quickly, they're going to be left behind. They're going to have a lot of risk. It's going to be challenging to scale, and they're just going to fall behind. Over the last couple of years, I've seen a huge difference in how receptive property managers are to technology. And I think they're just willing to try new things because there are challenges in this market, and it's becoming scary for a lot of folks. So the more you can embrace technology, the better.
Yeah. Well, if you have any other questions, pop them into the chat. We'd love to try and answer them the best we can. This has been really interesting. Do you have anything else that you'd like to close with, or any other crazy stories or anything you've been hearing on the road? I know you've been hitting the conference circuit. I know you're going to be still hitting the conference circuit, right?
A busy couple of weeks ahead. I'll be at NARPM National in a couple of weeks in my hometown, Orlando, Florida. If you're there, definitely come talk to us. We'd love to see you. Outside of that, I don't know what our schedule looks like in 2026. I'm always at the broker owner event. I think that's a fantastic event for any owner of a property management business. I would also encourage property managers to sign up for a lot of newsletters that are out there. There's really good information that's posted every week. I read probably 2 or 3 newsletters a day for different folks I trust in this space. A lot of people are posting really good content, and it's giving you a much wider range of topics to consider and viewpoints to consider. I think that's something really unique in this space. Property managers are really good about not being too concerned about competing with the guy down the road. It's more about how can we partner to make sure that we're both running a sustainable business. So I think that's something that I would definitely recommend. Dana, yeah, absolutely. Peter Lohman, off the bat, pretty much everybody knows him. He runs a fantastic one. So does Todd. Mark Brower is fantastic if you want motivational content. He's really good about the psychology behind making decisions and management.
Mm-hmm.
Stacey puts out a ton of great content as well. I really like the information that there's a company called Rent Engine that's a little bit newer to the space. They have put out some really fantastic data on leasing trends and what's happening with showings. I find companies like that fascinating. If you're on LinkedIn, definitely connect with me. I post a ton of stuff like this. I just find it exciting and I like to talk about it.
Yeah, I would say also Second Nature. They put out a good newsletter. Planomatic puts out a monthly newsletter. They're pretty good. I mean, I would say all of the good vendor partners also put out some good content and newsletters. Even though I went kicking and screaming on LinkedIn, it has really benefited me. I love Facebook and Instagram. Instagram's really my favorite. But LinkedIn has been a great resource for a variety of people, whether it's property management, business owners, or the surrounding people for that.
One that's a little bit newer, but I've actually found really interesting. Lacey Hendricks recently launched Clearly Digital. She did some interesting research around where source material is coming in from AI sources, so like a ChatGPT. Over 40% of the material that is surfaced in ChatGPT searches is coming directly from Reddit. Reddit is one of those sources that I personally don't consider a lot, but it is a really interesting space. She has a channel specifically for property managers reviewing tech, looking at new trends. It's a great community to talk through challenges and what you're looking at and who you're interested in. Maybe I can share that information with you and you can share it out, because I find Reddit a very underutilized source.
Yeah, I actually had not joined Reddit until she invited me, and I'm in that Reddit group. I will admit it has not become part of my social media routine. My social routine is the top 3, LinkedIn, Facebook, and Instagram. But yeah, and in fact, she wrote me a glowing review on there. Taylor, you should go read it. I was like, wow, that is really kind. She and Alex co-founded Clearly Digital, where they're helping property management business owners on their SEO, which I think is really cool, because that is also needed out there. There's a lot of things that we all need. But yeah, there are so many great resources out there. I will say LinkedIn has actually been a really good one. I've made some really cool connections, some really good friends, and even kind of like third-party property management. There's some other people in there that are really cool. So yeah. Awesome. Well, I really appreciate your time. I know we've got your contact info. And like I said before, this gets edited. And then we usually send out the replay about a week out or so. I always post them on my YouTube channel. You should subscribe to my YouTube channel. I am relaunching my community. The doors open on October 17th and close on the 30th. It is an awesome community. It's only $97 a month to join, at least this quarter. We focus on one topic a month to help future-proof your business. I do live events and invite vendors to do live events. You get other perks as a member. The doors will be opening again on October 17th. So you can scan the QR code and join the wait list. The first 25 new members that join get a VIP bonus. So be on the lookout for that. Anything else you want to add to close out?
No, I think this has been great. The topic of risk and property management can go so many different directions. So if you got 5 hours, I can talk about this continually.
I think that goes for all of us in property management. That's why we go to the conferences, because we all understand each other. Our family isn't walking away from us as we're like droning on and on about all the things. But yeah, thank you so much for coming and sharing everything. I hope you reach out to Taylor. And if you're at any of the conferences, go by his booth or hang out with him after hours. They usually start at the bar and then go to the events.
Exactly.
We will see you all soon.
It's been a pleasure, Stacey.